Good day, guys. Good day, guys. Good day, guys. This is Benedict Tapelo speaking on the line. Please do like and subscribe our videos on YouTube. Benedict Tapelo. I will send the videos on our group channels, right? So what's happening is I just want to highlight key factors that we face or problems that we face from students each and every day on a normal basis. This is the challenge. So what's happening is this is a tip. I will just be a little bit short just to give an advice and an update, right? So what's happening is, guys, remember, we from Tapelo Investment Trading, we mainly focus on technical analysis, meaning we trade technically, practically. We trade what we see, not what we think. We trade what we see, the analysis, the chart, price action movements, right? Not news. We don't trade fundamentally. So we are against fundamentals all the time. Reason being is that most of the time when we enter the trade, we don't expect the market to move simultaneously or at the same time. We have to wait most of the time. Technical traders, you wait for the market to react before making any movement or any changes. Before expecting to be on profit, you have to wait for the market to move. Give the market time to breathe. Okay, so the main problem is that a lot of traders, when you enter a trade, you expect the trade to move at the time you enter the trade, right? At the price you enter the trade, you expect the market to move. Most of the time it works, most of the time it doesn't work. So there's a probability, or there's a huge chance and a slight chance that at the same time when you enter your entry, when you execute the entry level, there's a high possibility that the market may move or it may not move, right? Based on fundamental structures. So I just want to highlight onto you that technical traders, you must firstly have patience. You must enter the market and wait for the market to respond. Secondly, don't trade with emotions. Enter the market, leave the market. Go do something. Be busy with something. Read or catch up. Remember, knowledge is power. Do something. Don't enter the trade and watch the movement. Doesn't work like that, right? And then thirdly, you must always be obedient when you trade, right? Don't be greedy. Greediness will kill you. Greediness will destroy your account. It will blow your account many times. So if you enter the trade once, don't enter again. Don't enter third time, fourth time. Doesn't make sense. But if you have your account that is settled, that is balanced, then you can do so based on your experience. You don't just enter the market the way you think, right? No matter how beautiful or how nice the market responds onto your strategy, make sure you enter, you leave the market. If you enter twice, 8 times, leave the market. Don't come back and enter. Oh, leave. After 10 minutes, you come back and enter. After 30 minutes, you come and enter. You understand, you get the scenario. So if you enter now at 1 o'clock, make sure you enter at 1 o'clock. Leave the market, let the market move. Do not overtrade. That's the fourth step, right? Do not overtrade. Overtrading is risky. In forex, you are taking a risk. We know that, but we are not being risky enough to settle our account. We are taking a risk, not risky. Risky is gambling. When you become risky, a risky person is a person who does gambling all the time. So we are risk takers. We are chance takers. You know, we move the market. We do the probabilities. We manage our account, right? We balance our account. We calculate the price movements before we enter the market. Fifth step, calculate before you enter the market. Calculate your entry level, from your entry level to the stop loss. Calculate your entry level to a take profit. Don't enter a trade without knowing where is your take profit, where is your stop loss. You must balance the two, right? When you enter the market, you must know at how much are you risking with, how much are you gaining from that account or from that trade, how much is it gonna pay you. right? So forex is not gambling. Let me show you why. Let me tell you why. Because when you enter the market, you already know, I want to make this much. The market must give me 1,000 today, 2,000, 3,000. Already you know. That is what you are expecting. Those are your expectations from that trade. Okay? So when you are gambling, you don't know how much you're gonna get. Traders do that most of the time, but they don't know that they are gambling. That's why forex, they say, is gambling and all of that. But basically it's not gambling when you know your take profit and your stop loss, when you know how much are you risking with, right? The sixth point is that you cannot risk with the amount that you can't lose. If you are willing to lose 600, risk with your 600. If you are willing to lose 1,000, 2,000, 3,000, risk with that amount. Okay, you must always know how much you are risking with. That's the key factor. A lot of traders, they don't know. They just enter a trade and they leave it that way and say, okay, fine, we will see if the market pays me or not. I don't know how much the market is gonna give me. That is just imaginary. That is just expecting the market to do this and do that. But you don't know what you are not expecting. Something, you are just expecting nothing. Okay, you are just gambling. So if you know how much you are willing to risk with, how much the trade is gonna give you, how much you're gonna lose, then in that way you are expecting the reward, you are expecting the return. There's always a return in forex trading. So my students, my guys, I just want to make this thing very simple and understandable. Always remember, we are technical traders. So every time when you go into our group, you join our group, you work with us, you join the company, the main important thing that you must know is that we are technical traders. We trade for the long run. We do scalp, yes, probably, but we trade for the long run. We expect the trade to move. We allow the market to move. We allow the market to move. Remember, you don't move the market. The market moves on its own. What you do is just put your certain percentage in the market, and you just leave it there. That's how you trade. Okay? So a lot of traders, they were asking me last week, students were asking me, saying, the only problem with our signals is that they take too long to be on profit. Like probably they will take an hour, sometimes 30 minutes, sometimes 15 minutes to be on profit. Okay, so the main difference is that when you're a fundamental trader and you have news, for example, you have FOML, or I don't know, we can say, yeah, okay, let's say we have NFP, non-farm payroll, right? We have NFP at 2:30. Okay, at 2:10 to be exact. So what are you doing? You are saying when you enter the market at 2:30, because there is a high impact of news, simply means the market is gonna be volatile. It's gonna move quickly. When you enter the market, you are expecting the market to move immediately after entering. After having your entry, you are expecting the market to move immediately. Knowledge, right? But when you are a technical trader, you are trading price, resistance, support. So what's happening is that when the market comes into your support level, we are expecting the market to retest the support, go back, come again and retest the support before it goes up to the resistance to test the resistance again. That's the difference between fundamental and technical. When you are trading fundamental, you expect the market to move immediately. There's a high percentage and a high probability that at that time there will be a high impact, that the market will move quickly. But for us technical traders, we are patient traders. We wait for the market to retest, do whatever it does, consolidate, all those things before the market moves. Knowledge, that's what we know as technical traders. So I'm expecting you guys, please, when you use our signals, have patience, wait, don't execute the market on a loss. Let the market move. Give the market breathe. Give the market some space to breathe. give the market some space to breathe. In that way, I'm telling you, you will see that there is a high chance that you will have consistent trade. You will have consistent in making profit. Why? Because you have patience. And also, I saw someone said last week, I've been consistent with your signals. The main problem, I blown my account based on the fact that I entered too many trades, and those trades went on to profit. I didn't close. I said to him, the problem is not that we didn't close. The problem is that the market didn't hit the take profit. Why? Because it couldn't hit the take profit because you executed too many trades. You had too many trades for a small account. So when the market goes in an opposite direction to retest the support, that's when your account blows. But if you had 2 or 3 trades, your account was gonna be, balanced. You're gonna be on a loss, not blowing the account. On a loss, lose a certain percentage, but it's not a loss. The market is still moving. So that when the market comes back, then you'll be on profit. In that way, you are balanced. But the way he did is that he entered too many trades for a small account. But we learn from our mistakes. So guys, please don't make that mistake. Have patience when you are a technical trader, and don't be crazy. Wait for the market to breathe. Wait for the market to move. Wait for the structures to form. We are formulative structures. We wait for the structures to form before we enter the trade. Thank you guys. Please do subscribe and like our videos. Thank you very much.